For the HSBC, frankly speaking, the profit before tax is higher than the market forecast and our expectation. That should be good news for the markets. But frankly speaking, we need more detail to analyze the overall results, because whether the better than forecast result is driven by lower provision or a higher percentage of revenue is totally different. For us, there are a few points we need to take attention to. For example, for revenue, especially the interest income, we all know that the interest margin will further increase, but we see some slowdown in loan growth. So whether the interest income will perform will affect overall the performance. And also because we all know that in Q3, the market sentiments changes are not. So especially for retail bank, the fee income or commission income will under pressure. And finally, for the GB&M, which is we call global market, it's really challenging for them to outperform. And also we need to pay attention to ECL is the expected credit losses. So we think the market is overdone. So because with a lower provision, that may be one of the key reasons why the overall profit is higher than the market expected. And in terms of some key data, for the CET1 ratio, more than 14% is acceptable, and especially for the income and expenses ratio that juice, we see that there's only negative 1 point something. We see some improvement. So overall, I think the earnings result should be acceptable and good for the HSBC share prices.
What are some of the headwinds that you're looking to, Kenny, over the next year or so? Are we talking about the U.S.-China trade spat? What are we talking about here? Brexit? What are the things that you think might put a dent in those earnings for 2019?
Obviously, it's the revenue growth may be further slowed down. As I mentioned before, we do need to pay attention to the ECL, which is the provision. Now, given the changes in financial policy, we need to using some economic background forecast to calculate the provision. So the real challenge will be in Q4 and especially in 2019. So we have two attacks, one from revenue and one from provision. So we think that in the near future, the HSBC result will subject to a real challenge. But I think that in the foreseeable future, there will remain the dividend policy, which using the current price to calculate is almost 6.5 to 6.6% per year. So it shows that valuation is quite attractive. And also maybe in Q4 in 2019, we will have another round of share buyback. It usually will be positive on the share price too.
Kenny, when it comes to the macro factors out there, how concerned do you think that HSBC management at other banks is about the yuan level at this moment, given that there are concerns it could lead to perhaps financial instability if it weakens from here?
Yes, it's a real concern because not only the RMB depreciate will hurt the company profit. Usually the RMB depreciate means that the market is bearish on the RMB assets. So you can see that usually we represent that the Hong Kong market and the China market will have a highly volatile situation that is not good for the fee income and commission income as well. So I think this is key issue we need to focus on, whether to do some hedging or the company to change the strategy to minimize the impact on the devaluation of the RMB. We believe that the RMB depreciate to 7 level is just a matter of time. So this is one of the issues investors should pay attention to.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.